All right, so I'm just gonna do a little intro video. I've been trading since I was 17. I'm 21 right now, so about 4 years, just under 4 years now. Um, Mainly in Cube. I haven't done any M and Q lately. Just size down with some recent market volatility. But okay, so to explain this, this indicator I developed right here. But this is one that was developed by, go ahead and look, DC77. So the way it works is that basically when it's in a day, right? So from market open, which would be 17 on Central Time, um, Central Time, which would be America, Chicago, to 16, right? So I bet 15, because 16 is not an open market hour in Central Time. All right. So basically what this tries to do is it'll look at market open and historically. So this represents the historical high of a bearish session. This represents the historical low of a bullish session, which is like, one that closes higher than it opened. This is the high, historical high of a bullish session, historical low of a bullish session. So just how it reacts on average. So you can like expect price to do this, or just use impulse wave. But it'll start here, and if it's a bullish session, just push here, push downwards on average, and then pushes somewhere like this is the high of the day, and it closes somewhere above this open. That's what a bullish session looks like, right? And for bearish, it looks like this. You usually get a push up and then, push to the low and then a close somewhere in here. So, right. So now we know how historically prices action has acted, right? So this is Friday. I only trade New York Open, right? So go ahead and get a session indicator on here so you can see. So, and throw that. Um, Actually, I think I like Lux Algos better. And I'm just gonna do like a raw video because I feel that y'all can struggle just as I am right now. It's more real seeing exactly how stuff works out. Okay, so turn off Tokyo, turn off London, all that. And we're just gonna straight up get the 8:30 session. So I'm gonna go ahead and move that 13:30 to about 15 o'clock, which would be probably like 21. Right. So, no matter. So, New York Open. So if we close open outside his range, I'm already like, okay, no trades. I just don't trade these type of days. Sometimes you get a nasty mean reversion. A lot of times you do get a trend continuation, but this is telling me that price is just we're moving out of the auction range, the previous auction range. So almost 800 points away. We're entering a new auction. So we don't have any, I guess you could say support and resistance, but more so like supply and demand levels. So there's really no reason for me to be trading because I'm just trying to predict. Obviously, if I had gotten in within like, pre-market, which I don't trade, then, it worked out, but it doesn't matter. So we're gonna go ahead and go back to the day before. I'm just gonna give you an idea how I trade. Okay. So we're gonna wait for market open, which market open is right here. So market was right here. Um, we pushed upwards, right? And then what this means is that historically, so I use the 20. So over the last 20 bars, last 20 minutes, if we're on the 5 minute chart, that would be the last hour and like 40 minutes. It really don't matter. We're hitting a 90th percentile move. So not very often do we push past this. Like, so if you know what normal distribution looks like, it's something like this, where 68% of the data, happens within a standard deviation. It's kind of crudely drawn, but it doesn't really matter. So here we go. We get a vertical line. So 68% of the data happens within the standard deviation. So 68th percentile. Then it goes to like 85, 90, whatever, right? So if we look at this as the 90th percentiles right here, we can see that it's very rare for us to even exceed this. Let's like view it as, um, this is normal price movements, right? So like it'd be something like this, like just normal. And then as you get more on the outside, you get like bigger bullish moves, or bigger bearish moves from this side down. So it doesn't happen that often. Anything like right here, like once the curve steepens, these are rare events. So when you get one, a lot of times price likes to mean revert. And if it doesn't, then you kind of know you have a trend continuation. That's just a basic example. Let me go ahead and take this off. All right, so let's go back. So we got a um, push above market open, which would be at 5 o'clock from the previous day, Central Time. We already got a manipulation move down, a manipulation move up, and a manipulation move down. And right now, price is telling me that we're overextended. New York session just opened. Um, and the manipulation level is right there. So we've already rejected this area. We've already shown that we don't want to be in this area. This is basically, you could say, a premium, right? So a bearish order block, whatever, right? A lot of volume in this area, a lot of orders in this area, right? So price doesn't want to return us to this area. So you could honestly just take a short here, put your stop loss above it, right? And remember, we're trading 3 M and Q. So 100 point stop loss. So every 100 points is $2, so $200. And we're trading 3 M and Q contracts. You're trading with a $600 stop loss. Something too crazy. You're trading like a 50K count, right? And you could either wait for a symbol where you got like sort of overextended to the downside like this, or you could do price action based. So what I like to do usually is overextend to the downside, but take a look at right here. So we pushed, right, but we didn't get below this low. So I think I would say that there's good probability that we do take this low. You you know that price is more likely to reverse when it pokes above a high. So reality, maybe I should have waited for the short for this one because you could see that we poked above this high and we were overextended. Stop loss over the mean version. So this would have resulted in about a $1,200 trade. A little bit more, but this is my thought process. Um, and I would have done it for the day. So I'm gonna do one more day for y'all just to get my idea of how I think this is how you should be trading. Um, you don't want to make it too complicated. But okay. So 8:30, you get a mean reversion move, right? Um, Not really a normal highlight. This is a bulk, you know, maybe this, but you see a lot of this down drifting movement, and I don't really see any obvious highs. Maybe this one, but I don't really view it as a high. I would say the most obvious one would be this one, if I'm being honest with you. So we can mark that out. We got a mean reversion move, push above it. So maybe take a short here, right? And look where we're at above this mean reversion level, which we haven't actually poked through, which is kind of interesting. But anyways, you could just period stop loss above it, and then wait for the bullish symbol, which actually didn't happen, or push below here, which actually didn't happen. So this would actually be a loss in my book. But stuff happens. You can't predict price when it doesn't want to be predicted. All right. So the rest of the day, there wasn't really any setups. So, but just notice how big this smallest loss would be. 38 points, that's like 80, that's like $240 loss. It's whatever, right? We made $1,200 the next day. And so since I wasn't a win, I'll just give y'all another example so I can find y'all good entry point. Okay, so this one we pushed below. We never really got above the red line, so we haven't rejected this area yet. So I wouldn't take this as a high quality high short, um, especially since we haven't pushed above this one. So this is kind of interesting. I'm pretty sure all of y'all have heard of fair value gaps already. And this is the first fair value gap within this leg. And those have known to be good, support resistance levels. It's usually support, have a signal. We've already rejected the top, we rejected the bottom. So you kind of play it as a range. So a little dangerous that we're playing in the middle of the range type of day, right? But if you look, I mean, price is reversing the first fair value gap. So honestly, this is one of those where you can long it, set your stop loss very small, just $20. That's like, I mean, 20 points, that's like maybe $120 loss. and then wait for the opposing signal, or you know how we lined up in this area right here, right? So, but the high or this opposing signal. So if we hit this opposing signal right here, I have a high probability chance that we're gonna hit this line. So 159 point hit with only 20. That's almost 8 to 1 R&R drawdown. I released this indicator to people like percentiles indicator. You should be able to find it. It should be, let me see, links. You see all the drafts I've made. But it's this one right here, pivot link percentiles. It was the culmination of everything. I think it's pretty interesting. You should read into the documentation about how I did it. Uh, it's purely statistical method that I trade with. I don't try to use price action that much. I mean, obviously, statistical speaking, you could use price action concepts, right? So, statistically speaking, if price returns to a fair value gap within a leg, the first one that's formed or presented, you do see initial reaction off of it. So that's why I said it's a high quality trade. But I don't use fair value gaps normally in my trading. You just use statistical anomalies. So like watch price leg, market that fair value gap, rejection, and push down, right? But we didn't get any statistical percentile moves, so I couldn't take that short. Everything has to line up. You have to be strict and you have to use your risk management. You should not be trading NQ if you have a 50K account, unless you got some guide to your model or like algo model that says, yes, you're gonna make this kind of money, then I would say, you know what? I don't know why you're watching a YouTube video on trading, you know? But if you need help finding a model or something, I mean, this is pretty simple. And you just need two indicators, like a price action for price swings, right? No people stop losses, right? Um, and just use statistics to your advantage. And I recommend you don't look in the back like past like this because this indicator is like learning from the previous candles. But the way TradingView works is that it allows you 5,000 candles, right? So I can look back 5,000 candles. But like, let's say on this day, um, let's see, these days you see like this one, we probably have like 3 days worth of data. But if you count all the way to today, we have at least like 10, 15, 20 days of data. And the more data it has, the smarter it's going to be because I mean, that's the whole idea of trading. You're not trying to predict price. You're reacting to what it's doing, right? So if in the past you've seen price do something in the past and you're like, okay, how did price react to it in the past? What happened next? You basically you can't predict news, right? But you can predict the reaction to the news. Um, you're predicting people's psychology. People are very consistent, groupthink, herd behavior, right? People are very predictable. And that's what I try to exploit. I don't predict, I react. But yeah, I mean, this is the first video. Um, I have a full model, algorithm model. I trade it, auto trades for me. But it's just the basic idea of what I do. It's nothing crazy. Um, but I just thought this would be helpful. People are struggling trading. I spent 3 years losing money. I finally started getting some payouts. Still not consistent. I just graduated last year, last August. I have my job in finance. I have my degree. Um, so this isn't like I'm not struggling. I'm not trying to make it, you know, like I grew up, I got FAFSA, I got help with scholarships and all that. I wasn't given anything. I worked for everything I have, but at the moment, I use my brain, use my intelligence that's given to me by God to do this. To find something different, find a way out because I don't want to be working for the rest of my life. And I'm 100% sure no one else does too. And with the way, the economy is looking, um, it's more important now than ever just to find a way that you're not at the mercy of others to do things for yourself, put yourself on your back. But I mean, that's all from me. Um, if you have any questions, drop a comment and hope you have a good trading week. I will actually update you on Friday, see how my week goes. I'm trading a couple my fund and future 50K accounts using the algo, and I will let y'all know how that goes, and I'll provide proof. This is a little basic intro video to statistical trading. Then that shit's hard to say, but yeah, I would highly recommend statistical trading. It's objective. You don't have to worry about certain rules that are made up by other people. You just do what the price tells you, you know? But yeah.